Hello guys, what's up? The market move in trends and ranges. Watch till the end and discover more. Hello guys, what's up? I hope everyone is doing amazingly well. So in today's video, we're gonna talk about how the market moves, okay? So the market moves in ranges and trends, okay? So just stay to the end of this video because I will give you examples practically how you can use these examples on your own charts to actually be able to catch nice moves in the market, okay? So let's move straight into this, what I mean of today's video. So what I mean by the market moves in ranges and trends, it actually literally means that what? So let's say, for example, the market is actually moving higher. Okay, we've gotten some sort of bearish moves. Okay, moving higher. And what we're actually expecting for the market is for the market to come back into some certain demand zone right there. Okay, which actually means we have gotten a pre-established range from this low to this high, right? So this is our range with which we want to work with, okay? From this low to this high, or again from this low to this high. It depends on you where your demand zone is right there, okay? So anyways, this is the range right there, which means the market, again, is not a must for the market to come to this zone right here before moving, right? Because, again, I have gotten a very simplified way with which you can validate a retracement, okay? Because after every retracement, the market will always want to continue its move, right? Okay, so let's say, for example, the market came into this demand zone and it moved away, right? So again, what we'll be expecting for the market to do is for the market to come into some certain demand zone again before moving, right? Which means our range will be moved from this low to this high, right? So this will be the range with which we want to work with, okay? So after this break and this break, then this whole move from here to here will be our range. So actually we had gotten range 1 and range 2, right? So this is what I mean by the market moves in range and trend, right? So a bullish trend and it actually moves in range, okay? With this range on this, you can actually get that framework, okay? That contextual framework with which you can actually get those predetermined moves, okay? So the market might just move higher, or it comes lower, gives us some certain movement in here before continuing moves higher, right? So that is how the market will always and always move, okay? The market the market might even still come below this low even, okay, before still moving higher, okay? Again, remember, breaking once is not for a confirmed change of trade, right? I always want to see double breaks before I can actually confirm a trend, right? So anyways, let's move on to the live chart and I'll explain to you what I mean by that, right? So this is Euro USD on the daily, right? So as you can clearly see, we actually saw that we had some nice breaks to the lower side, right? Which actually meant the market was moving bearish, right? To a certain point right here where that displacement happened in the market, right? So we had that displacement happening in the market, which means the market has changed its face from bearish to bullish, right? So in this case, once those bullish moves have been put in place, it actually means that what, as per our higher time frame, it means the market has gotten more chances to continuing it move to the higher side as compared to the lower side, right? So you will always want to lean your analysis or your bias towards the higher side because of that higher time frame bias pre-established setup, right? So before I go on to this, I will actually want to let you guys know is that what, okay? Remember, I told you guys the market move in ranges, okay, and trends, right? This is how the market move, okay? The market okay, nice. So the market moves in ranges and trends, right? Again, so once you have gotten these established moves, or even before getting this pre-established move, what you should know as your roadmap, okay, you should have gotten a roadmap. Okay, the roadmap, what do I mean by roadmap? What I mean is you should always and always see a structure being put in place. Okay, you have to see market structure being put in place. Market structure being put in place. You want to see as well, after that market structure, what next you want to see? You want to see your supply or demand. Okay, depending of the trend, if it's bearish or bullish, whatsoever. Okay, and what next will be our confirm, right? So these are the three ways in which you want to see your market, or you want to work with the context. Okay, so what do I mean is that what the structure and supply should align with the context. Okay, it doesn't mean you should find any random breaks in the market and you say there is a break of market structure. No. Okay, so I will always and always, as for me, I always and always start doing my analysis on higher time frames. Okay, so this is Euro USD on the daily. So as the market gave us that displacement in here, okay, so I actually saw breaks to the higher side, but this whole entire move I couldn't find any nice entry. Okay, probably because I was busy or I didn't got enough time on the chart. Okay, but anyways, this break happened right here, and as well it left behind it a very nice potential demand zone with which we could work with right there. Okay, it left behind it a very nice demand zone with which we could work with right there. So what does that mean for us? It actually means that the range with which we want to see in the market is from this low, okay, from this low to this high, right? So this is the range with which we are working with. This low to this high, that is the range with which you're working with, right? So once the market is actually coming back into this demand or supply zone right here, this demand zone right here, we want to see some certain fractalized or lower time frame displacement for us to have gotten, or that second layer of confirmation that the market is still giving us green signals for it to go higher, right? Again, the market is not in full force to, like, the market is not by force has to come into this demand right here. It might still just go after this break right here, because as per the way I trade, after a close of previous candle with body, the market is already confirmed for another next move. Okay, that is as per the retracement. So this is for already a value retracement. The market could even just move higher from here. Okay, so let's go lower and see what happened when the market was right here, or even let's even continue. I'll explain more further with good examples. Okay, so what happened was the market came in here. Okay, it tapped into this demand right here. Okay, and as you can clearly see, it moved into our target as we actually expected, right? So after this move happened right there, so what next are we actually expecting to see? Let's say we had this price action right here. It actually means you're actually expecting the range to be now this low. Okay, this will be the range, this low and this high. This will be the range with which you want to work with, right? So this actually means that what we want to see the market come into some certain demand right in here before moving higher. Okay, though it can just move higher right from here because it has no reasons for it to come more lower, right? Some people might instead of looking for buys, some people might instead jump on the lower time frame, let's say 4 hour. Some people might even be looking for sales in here, saying they want to sell into that demand before buy. I don't trade that way, and of course if you are actually trading that way, you should be trading only and only when you are already profitable. Okay, but as I told you on the very previous video, that should be on my first video, I actually explained to you why demand and supply zones don't hold, because you're actually being caught on the wrong side of the market. Okay, so if you have already gotten that range and that trend been pre-established on your higher time frame, then at that time only you are being placed on the right side of the market. Okay, so your bias should be aligned with the higher time frame. So in this scenario, remember, we are not looking for shorts, right? We are not looking for shorts in here. We are not looking for shorts, but we are actually looking for longs. So we want to take the market higher, right? So that means that what it actually means, we have already gotten our, remember we had this, right? It actually means we have already gotten our market structure or break of market structure being put in place already, right? From this high to this break right here, that break happened right here. So that was already the break, which means our market structure had already happened. Okay, and the next thing was our supply or demand. So in this case, you are working with the demand right here. So this full candle, actually this candle from this high to this low is actually our demand, right? Okay, this is just illustration. It doesn't mean I trade this way with large demand and supply zones. It's just to illustrate for you guys. Okay, so as price is actually approaching that supply or that demand, sorry, so what I generally do is I move on to lower time frames. Okay, in this case scenario on the 4-hour, then again I will want to replicate what I actually did on the higher time frames. Okay, so I want to replicate that. Remember on the daily we had those bearish breaks, right? We had those bearish breaks. Same scenario right here on the 4-hour. Now we have gotten those bearish breaks. So again, we want to see that displacement happening to the upper side before again we can now take trades to the higher side, right? So it is actually a replication of what is happening on the daily. See, this is, you can actually replicate this whole move to be considered as what happened on the daily. See, this is what is happening on the daily right here, right? Remember, I am actually bullish on Euro USD. This is what is actually happening on the 4-hour. We had these bearish movements, okay? And then what we're actually expecting on now, on our present time frame right here, what we're actually expecting in here, sorry. What we're actually expecting now in here on the 4-hour is some sort of displacement like this. A similar situation like this should be happening in here on the lower time frame. Okay, so if you go back to the 4-hour, then we want to see that displacement be happening into the market for us to be aligned with the same direction in the market. All right, so let me get rid of this so I explain more further. So I will just play now the chart. I will play the chart and let's see what happened in the market. Okay, so when I find where that displacement happened in the market. Okay, perfect. So now we have already gotten one break to the upside. Now this does not mean we want to see or take trades from here. No. Okay, this is a little bit much more riskier. Okay, you might not be able to catch this move. Okay, remember, displacement move is when we have gotten two breaks to a certain direction. Okay, because this might just be some sort of absorption which might take the market lower before actually getting that actually move to the higher side. Okay, so now let's see what happened. Let's continue playing the charts. Let's see what happened. We had that first break. Let's continue and see. Okay, nice. Okay, so the break is actually right there. So let me show you guys. This is the break happening right here. From here to here, we had that body candle close, which gave us that break, right? So that is the second break, which actually means this is a very nice confirmation for us as in terms of displacement. Okay, so what do you actually now, after this displacement happening, what do you actually now do is that what you want to establish your range. Okay, remember your range we want to establish, but the trend already we know behind our head we are bullish, right? So now where is our range? Our range will be from this low to this high, which actually means that what we actually means we don't want to see the market trade below this low, right? Because this will be our protected low and this will be our targeted high, right? So we want to instead see the market trade above this high, right? So in this scenario, remember the retracement rule. I haven't talked about this in this public YouTube channel, but the way I trade it, it is already valid right here. Okay, so the market has gotten full rights to it for it to actually move higher from here. Okay, so it has no right or reasoning for it to come lower in some certain demand right here. Okay, because of course you will find most traders determining this to be their demand right here. Okay, so most traders will actually determine this to be the demand right there. Okay, so let me know on the comment section if you were actually trading Euro USD and you actually spotted this to be your demand zone. Okay, So I explained to you why this demand zone wasn't valid, right? Like, so once we have gotten that range being put in place, what you should always do is jump some lower time frames, jump into some lower time frames. Okay, let's move lower to 15. So now on the 15 minutes, what are we expecting to see in the market, right? So we want to see what? We want to see that retracement into some certain demand, which in this case is what we actually spotted to be this one. Okay, so once that market retraces in here, then we wanna see again our ranges being put in place. We wanna see again the displacement being put in place. So we're actually replicating what we have actually seen on the higher time frames on the lower time frames. Okay, so we wanna go lower. So let's see what happened in the markets. Let me increase the speed. Okay. Okay, let's see. So wanna see those minus breaks. Okay, so what happened is that what if you went lower, which was the case right here. So what happened was that what I saw this break right here. There was a break right here. Okay, another break right here. Okay, which means we had those displacement already have been put in place in the market. So this break and this break was already a displacement, which means that what if you are actually trading live charts, then you would have actually gotten this on lower time frames to be your demand zone for you to trade off from. Okay, so this would have been your demand zone for you to trade off from. Okay, so now let's watch how the market came into it. Let's go on 1 hour so the market can move more faster. So let's even maintain that time frame. Okay, so we move, and as you can clearly see, the market is actually moving into a bullish direction. So it actually exploded to the upper side, right? As you can clearly see, it exploded, and the market never came into that 4-hour demand right here. Okay, some people would have been saying they want to see the market come into this imbalance right here, or we feel this imbalance that was actually pending right here before moving, but the market will always never do that. Okay, so that is what I meant by ranges and trends. Okay, so now since the market has actually traded above this high on our lower time frame, let's say 15, if you could, or 10 right there. Okay, on the 10-hour, or sorry, on the 10 minutes, what we could actually see is that what we could actually realize that the range now has actually moved from this high. Okay, it actually moved from this high to this high right here. So this is the new established targeted high, and our lower range will be now this one right here. Will be this one right here. This low right here will be our range. Okay, so after establishing this range, okay, then you would have realized that we have gotten already a break of market structure right here. Okay, and of course our pre-established bias already is bullish. Okay, so the market structure is already there. Okay, which is where is those writing? Let me replicate those writing back for you guys. This right here. Okay, right here. Okay, so we've gotten already our market structure. In this scenario, we have already our market structure, which is right here. The break is happening right here. Okay, and then the next thing will be for us to find our supply and demand right there. Okay, so what we could say is that what we could actually say our supply and demand, our demand zone is right here. Okay, so we want to see price come into it before moving, right? So remember, supply and demand zones, they are not meant to hold to the last pip, or to see what generally happens is price might just come before that demand and it move. It might tap into it and it move, and it might even absorb it before moving, right? So that is what we are actually aware of. So we are not only waiting for price to come into our demand or supply zone before we are taking a trade, but when price has already gotten into our demand zone, or has actually passed it, at that time we are actually still looking for confirms. We are actually still looking for confirmations. Okay, it doesn't mean you should directly put a trade right here and your stop loss below here and you are actually targeting this high. No. Okay, you are doing the right thing but wrongly, right? So once the market is in your demand zone, you want to see what we call confirm. Okay, so now let's play the chart and see what happened next. Okay, let's go lower to the 5 minutes. So we are looking for those displacement to the upside for us to take a trade, right? Great. Okay, so this actually means if the market trades above this high, then that will be our first break, right? So let's continue and see. Right, so in this case, based on our retracement rule, this would have been considered as the first break to the upper side. Right? So let's continue and see. And the second break should be right here. Okay, so when I see the break of that second high, before we can actually confirm our entry. Nicely break. Okay, so in this case as well, what does that mean? It actually means we have gotten a confirmed entry, and we want to see price come into that last move right there. We want to see this demand zone be tapped into before we move the market, right? Another trader might actually say this is, so most traders might actually see this to be as the demand zone, saying we have gotten some sort of liquidity right here. Saying they have seen some sort of liquidity right here. They want to see price coming to it before moving, but most often that will never be the case, right? So always play with the most recent one after that valid retracement has been put in place. For example, in this one, we have already seen a valid retracement right here. There should be a valid retracement. I will show you guys what I mean by valid retracement. Let me play the chart. As you can clearly see, the market came into it in that demand zone. It moved very nicely, right? So in this case, there should be already a valid retracement right here. All this break of candles close with the body is already a valid retracement. It actually means the market has no reason to come back into this demand zone before moving. The market could just move from this point right here to the upper side, right? So that is what I mean by valid retracement. So as you can clearly see, this demand zone held and the price actually continued move to the upper side, right? So let me go on the 1 hour so the market can play more faster. As you can clearly see, the target was actually met right there. Okay, so if you want to continue, you could still say that, but you could still want to say you have gotten some sort of demand right here. But most often these demand zones will not hold because the momentum is already towards the upper side. So price has gotten no reason for it to come retrace back lower deeply before moving, right? So even if you play the chart and let's see what happened. As you can clearly see, price never again came back into it. It never came back into this demand zones right here. Okay, because we had already gotten our range, which was supposed to be this low right here was supposed to be our range, and this high right here was supposed to be the targeted high, right? So that was our range. If for example the market was still here, okay, most people again would have said we had imbalance in here, which is not always the case. Price will not always come into those imbalances before moving. Okay, most people would have said there was an imbalance in here. Price will not always come into that imbalance before moving, right? So if we actually went on lower time frames, you would have seen more examples for you to take this trade higher right here. Okay, based on this valid retracement right here, there was already a valid retracement right here. So it actually means the market had already gotten valid reasons for it to move higher. So the market will not always come into those demand zones before moving, right? So that is what I had for you guys today. So just a recap. So always start with the higher time frame. Try to figure out where is your range, right? So once you have gotten a pre-established range, only at that time you can drop on lower time frames. determining where is your demand zones. At that time only, you can drop again more further to see where are those valid retracements. Then at that time, you want to search for those valid displacements, okay, those double breaks to the higher side or lower side based on your bias. At that time only, you can take those trades based on your confirms, okay. So I also made a video as well previously where I talked about why demand and supply zones most often doesn't hold. So if you haven't watched that video, it's actually my first video. Go into that video, try to grab some knowledge, and then rewatch this one. Then you will get more knowledge of what I meant by that, okay? Because what you actually see is that you actually see most people want to take shorts instead. Some people might say this is a supply zone right here. Some people might say this is a supply zone right here. Some people might say another supply zone might be right there up, okay? So they might instead be looking for sales right there. But for me, already on my daily time frame, I know what or where I am heading to. I already know where I want to see the market delivering into, right? So I want to see the market delivering into these highs, okay? I want to see these highs being taken out. So Euro USD for me, as per now, is very, very bullish. It's a very, very bullish trend, right? So the market is very, very bullish. So I want to see this high being taken out. So even if you go most recently, I had some more examples in right here. I had some very nice examples right here. So we're actually on the 4 hour, which we saw this to be our demand zone right here. We had a very nice demand zone right here, which as you can clearly see, the market never came into it, right? The market never came tapping into those imbalance, as you can clearly see, and it actually moved, right? And again, you will actually see most traders want to sell the market from here. They will actually say that what? They will actually say they have gotten a break right here and they want to sell from some certain supply zones from here, which will not ever be the case. See, when you are not on the right side of the market, you always being hit, always most often in the market, because you are actually disregarding the fact that the market has actually gotten a higher time frame bias context, which you have to align your bias with, okay? Euro USD on the daily is already bullish, so it makes no sense for you to drop on lower time frames, seeing random breaks and say the market wants to go lower. I bet with you guys, probably most of you guys want to short the market from here, okay? But what will actually happen is the market might just react off it from some certain small retracement. Again, it will give you some certain framework with which you want to work with, okay, some certain range, and then you will see the market continuing to the higher side, right? So this was actually, for me, what happened here right here was some sort of absorption, okay? Some sort of absorption happened right here. That is why you saw this low being taken out. This is not a break, okay? So as you can clearly see, Euro USD for me, it's very, very bullish, okay? So I hope I'm very correct on this. I will actually update you guys on what happened next on Euro USD. So this is my next target based on this range from this high to this low, okay? So this is my targeted high and this is my protected low right there, okay? So I hope this video had gotten much knowledge for you guys to actually grab on. So if you have any question or if you have any particular topic which you want to see on the next video, please do yourself a very nice favor by dropping on the comment section, okay? And then we'll work it out for you guys, okay? So please like this video, share, and as well recommend the video to your friends if you think this is actually of good educational stuff for you guys, okay? So also watch the previous videos, okay? We made some very nice content right there on how or why you can actually how you can actually exploit your demand zones for high risk to reward zones, for high risk to reward trades, sorry. So that is the most recent one. You can watch that video as well and comment and let me know what you think about those videos, okay? So see you guys and have a great time. Bye bye.